Hi, I'm Eric Post. I'm an economist here at ITR Economics, and today we're going to be talking about picking indicators. So hopefully you watched the last video about rates of change and checking points and what to look for there. Now we're going to take it to the next level. So not just what you are seeing in your company's data, but what are you seeing in the world out there, and what does that mean for your company? Let's talk about the four main groups of economic indicators. You've got your macroeconomic indicators. These are things that you're familiar with, right? Real GDP, industrial production, retail sales, business-to-business activity, which we look at non-defense capital goods new orders for, as well as microeconomic factors. Now, most people, when they think of microeconomic factors for their business, they think of end-use markets. So if you sell into the chemical industry, maybe you'd look at chemical production or chemical shipments. If you sell into the construction machinery industry, you might look at construction machinery new orders. So the important thing when you're looking for end market indicators is make sure that you're looking at different metrics of them, new orders, production, wholesale trade, and the like, because any one indicator can be susceptible to error. Maybe the data is just a bit strange or volatile, and you want to be tracking a system of leading indicators to account for any variability that might be happening in the data. And so you want to get that broad swath of end markets. The two that people don't think of so much, though, are complementary markets or substitute markets. So a complement is something that works together with something else. So my example here is construction materials and power tools, right? If you have all these construction materials, but you don't have any power tools to construct, right, you're in trouble. If you have a bunch of power tools, but nothing to put together, also not very useful. But together, those two goods complement one another. And so if you are a power tools manufacturer, you might also want to see what construction materials manufacturers are doing, for example, because the drivers of your businesses might be the same. Substitute markets, it's an either-or situation. So what I have here, I just redid my basement, and I had the choice. I could put in hardwood flooring, or I could put in laminate engineered flooring. So if you are buying hardwood flooring or engineered flooring, it's an either-or choice. Me as the consumer, I have to pick one or the other for my basement office, right? And so because of that, the drivers are the same. I'm the customer, I'm driving those markets. And so even if you do only hardwood flooring, how those engineered flooring manufacturers are doing actually might be relevant to you too, because they have the same drivers as you do. Okay, let's talk about financial indicators and pricing indicators. So you can look at this both on a macroeconomic basis or on a more granular basis, and I would encourage you to do just that. So on a macroeconomic basis, a lot of our clients relate really well to the producer price index. You might also try the consumer price index, but generally speaking, our client base tends to work better with the producer price index, and that's one of the trends report indicators, so you'll be able to see the 3-year forecast for that as well. You also might track the Wilshire total market cap. That's just a measure of the stock market like the S&P 500, but unlike the S&P 500, it's a much broader measure. S&P 500 looks at the 500 largest companies, more or less. The Wilshire looks at more like thousands of companies. Corporate profit data, we like the series with capital consumption adjustments, is also really relevant and helpful too. But I would say that you also should consider industry-specific producer price indices. You also should consider industry-specific producer price indices. Another good one is ETFs. So let's say you're an industrial business. I would encourage you to look at the industrial sector ETF and see how do the stock price movements of the industrial sector specifically relate to your business. Another one is corporate profits. We have corporate profits for manufacturing. We have corporate profits for all sorts of different end markets. And so you can see specifically, okay, if I'm a food and beverage company, how are the corporate profits of food and beverages doing? And normally what you'll see is that those have a nice leading relationship to your company because you need those profits in order to be able, for people to be able to invest in those kinds of products. Then the last big category is leading indicators. So we have all of our favorite US leading indicators. If you're a Trends Report subscriber, we report on these all the time, right? Your ITR leading indicator, the OECD has its own US leading indicator, the US total industrial capacity utilization rate, so on and so forth. There are some others listed on the screen there, but there's a host more than just those ones there. For global leading indicators, we like to look at the JP Morgan Global PMI, and we also like to look at the OECD plus 6 non-member economies leading indicator. That's a mouthful, but basically what it means is we look at a leading indicator for all of the OECD countries plus the 6 largest or so non-member economies, your Chinas, your Indias. And so put those all together, and that's a tremendous amount of the world's global GDP. And so that tends to be a very nice leading indicator for global-minded companies. Now, if you do a lot of business outside of the US, or you're completely outside of the US, you'll want to be looking, of course, for those more international leading indicators. So the OECD has leading indicators by country, so you can find the China leading indicator, you can find the Poland leading indicator, you can find the Brazil leading indicator, you can also find purchasing managers indices, PMIs, for those countries as well. Utilization rates, those vary. Some countries have them, some don't, but I would definitely recommend looking at those as well. Business confidence tends to be a pretty good leading indicator for international as well. So just some ideas. And the last note I'll make on selecting indicators is we work a lot here with industrial businesses at ITR. Our clients are always surprised at how much consumer activity drives their business, how they actually have some pretty nice relationships to those consumer-based leading indicators. I'm thinking of like savings rates, loan delinquency rates, things that measure the health of the consumer. And so why is that important? Well, in the US, consumer activity accounts for the vast majority of economic activity. And so even if you're in an industrial business and maybe you serve an industrial market, who's actually buying, ultimately, if you filter through the chain, who's actually demanding those goods? It's usually the consumer. And so I'd really encourage you to make sure you look at some of those consumer-based leading indicators. Savings rate is one of our favorites. Savings today leads to economic growth down the road, usually a year or two later, actually. And if you see that savings rate drop, that's a warning sign, because that means that savings are low and consumers might not be able to sustain the economic growth that they were maybe able to. So let's take a look at your DataCast. So I'm looking here at a screen of the initial DataCast if you click on View Analysis. And what I want to show you how to use is the Filter By button. So you can see that down there in the corner. So if I click on that Filter By button, it gives me this host of different menu options, all kinds of things. Lead lag range, correlation range, search by keyword or NAICS code. So what do you do with that? I want to show you what I do when I use DataCast for a client. So in my sample data set here that I'm going to explain to you here today, I'm assuming I'm a machining company. Producing some sort of machinery. And so I'm going to search for any indicator with the word MACHIN, right? So it'll pick up machining, it'll pick up machinery, it'll pick up machine, right? Any of those will be captured in here. And then I'm going to do a couple more things. I'm going to search for anything that's at least a 2-month leading indicator. Right? I don't want lagging indicators. I probably want things that lead my business. And so I'm going to look for lead times. I'm going to assume that I'm a North American business, so I'll filter there on North America. And I'm also going to look at correlations of at least 0.75. I'll be greedy here. Right? We should have some pretty good indicators for a machinery client, and so let's shoot high there. Could I have gone 0.65 and higher? Sure. You'll have to just experiment with that correlation to see what works the best for you. And then the last thing I'll do down here is I'll sort those results when they come up by lead lag. And so we'll start with the longest lead lags. And you can see right here what pops up first, the US machinery capacity utilization rate. We just talked about that, right? Look at capacity utilization rates. When those start creeping up, that's going to lead to higher demand in your industry, typically speaking. And when those get suppressed, usually that's not a good sign. And so that has a nice 0.79 correlation and a 7-month lead time. Seems pretty useful to me. And so you can see all these different ones that have machinery in here. You might also try some NAICS codes if you know your NAICS code of your business, or some NAICS codes of those complementary or substitute markets. Those will be helpful too. And that will give you a great set of microeconomic indicators here. So again, if this is just for a machinery client, but you could, maybe you do something else. You can think about what key searches are relevant for you there. So now we'll take a look at something a little different. If you go up here, you can select within this category of, it's called select category here, you can select leading indicator, and those will give you some of our leading indicators that we like to track here at ITR. And so I'm going to make sure I put in a lead lag restriction and a correlation restriction. I'll make the correlation here 0.5 because leading indicators are going to have a longer lead time, and so by definition almost, they're going to have a little bit lower correlation than some of the microeconomic indicators I just showed you a slide before. And so what pops up here? Well, we've got U.S. total federal debt on a 21-month lead time, the ITR retail sales leading indicator, Canada leading indicator, US OECD leading indicator, and at the very bottom there, our ITR leading indicator, along with a couple others in between there. Okay, so what do I do now, right? I've got some microeconomic leading indicators. I could do this same sort of search and search for all sorts of different things that, like I showed you on that first slide, your micro factors, your macro factors, your financing and pricing factors, and last but not least, your leading indicators. But how do I know what makes them good, right? We get that question all the time. Hey, Eric, you showed me this indicator in your report. How do I know that it's good? Well, there's 3 factors that we look for. And it's really important that those indicators check these 3 boxes at least reasonably well. And so we're looking for a logical fit, right? If I saw Moroccan paint production pop up and I am a machinery client in the US, it might have the greatest correlation and the greatest lead time. But if I don't have a story for why Moroccan paint production impacts US machining, then I probably shouldn't be tracking it. We also look at lead time, of course. The longer, the better. And then last but not least, we're looking, is it a reliable predictor of business cycle peaks and troughs? Note that that's a little bit different from correlation, right? Correlation is just a mathematical number, but looking at the graph and seeing how well does it line up in history will tell you how much you can trust it going forward. So again, takeaways. Correlation, it's going to help you sort out some indicators that maybe just aren't at all relevant for you. Right? If it has a 0.1 correlation, it's probably not very relevant for you. But don't just necessarily think that a 0.7 correlation indicator is inferior to a 0.72 correlation leading indicator. You may find that one is actually a better predictor of business cycle peaks and troughs than the other, and so you want to be trusting that more. And then the last point is, like I said at the beginning, any single indicator can be susceptible to data abnormalities. A market can start behaving strangely because of government intervention or strange consumer behavior or who knows what. And so what you want to be doing is tracking a system of indicators. And that's why, if you think back to that initial slide, I give you lots of different ideas: micro factors, macro factors, financing and pricing factors, leading indicators. And you want to develop that system so that you can look at what is that system saying in totality. That's exactly what we do for the US economy in each of the end markets that we forecast in the trends report, and that's what we want you doing with your business too. Okay. So let's take a look at some of those indicators for this hypothetical machinery company and see how much we like them. So here in the green, we've got US total federal debt. I told you that was on a 21-month lead time. You can see that it shifted forward. It goes off into the future here, and that's because of that 21-month lead time. And so the computer lines up the peaks and troughs the best that it can do. You can play around with that lead time to see if you can make it look a little better, if you maybe do a little bit more than 21 months or a little bit less. And I think this has done a pretty decent job. And so what you can see is here the Great Recession lines up, right? You can see that the 2001, 2002 recession lines up reasonably well, but it's not that great, right? You can see that here you've got this big giant declining trend in federal debt on a rate of change basis, and we actually had multiple cycles in your business here. Right over here, you can see the low here reached in the machinery market here in 2016. Well, federal debt would have suggested it would come much, much later. And so, I don't trust this a ton based on the timing of the business cycle peaks and troughs. It's not that predictive. Do I have a story for why it might matter? Well, yeah, higher debt would mean more government spending probably, and more government spending is a stimulative to the economy. And so, yes, probably higher debt is probably going to help my company grow. And if there's really lean federal budgets, that's probably not going to help my company grow. But do you really buy that story? I mean, it's a story, but it's kind of a distant story. And so I probably wouldn't include this indicator because it just isn't quite good enough. I love the 21-month lead time though. So it's not the worst, but it's definitely not the best. It probably doesn't make the cut. So let's move on to another one here. We're looking at the Ohio leading index relative to a machinery company. Well, what's my story? What's my logical relationship? Are there a lot of machinery companies in Ohio? Sure. Does this company, my hypothetical company, operate in Ohio? Well, it's a hypothetical company, so I can make it wherever I want. But if it was in Ohio, of course, yeah, I'd probably be a little more interested in how the Ohio leading index is doing. But if my company is in Arizona, this probably isn't so relevant, right? And a lead time of 11 months, that's not so bad, but look how inconsistently it calls the peaks and troughs. It does a nice job over here, but then look at all this up and down in the leading indicator within the blue line. It's not a consistent predictor. So this is, again, not the worst, but I'm going to keep looking. Mexico leading indicator. Of course, you want to ask yourself, is this logical? Does your company do business in Mexico? Maybe they export machinery to Mexico, I don't know. But if you look at this, not such a great fit, right? Some alignment here, but you've got this great big trough here in the leading indicator, and that did not happen in the company data set. So here's an example of one that we like. And of course, I'm going to pick the ITR leading indicator. Totally biased, I fully admit there. But if you look here, you've got a 10-month lead time, so definitely actionable. Do you have a logical story? Well, of course. ITR leading indicator is a leading indicator to U.S. industrial production. And if you have a stronger U.S. industrial sector, is that going to benefit a machinery company? Absolutely. And so then last but not least, is it a consistent predictor of business cycle peaks and troughs? Here, 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 here. It doesn't do a great job over here. This, your company had a run up into the Great Recession here, and the ITR leading indicator just kind of took a dive, but honestly, that just would have made you prepare for the Great Recession all the earlier, which wouldn't have been a bad thing. And then over here, there's a little bit of mismatch that I don't love. Right, the company started coming up earlier. The ITR leading indicator started going down. Right, it called it a little bit late here. Why might that be? I'll give you a great hint. Pricing, right? That was the 2015-2016 oil price crash. And so commodities started coming up in 2016, but industrial activity slid deeper into 2016. And so maybe you need to look at a pricing indicator for this company too. Again, this is the perfect example. Even though the ITR indicator is a lovely leading indicator for this company and absolutely the sort of thing you'd want to be tracking, it's not the end-all be-all. So let's take a look at one more feature. If you look here and you go to download data, that's their fourth tab, you can click on download list. Why do I like to download your list of indicators? Well, this is what I actually like to do sometimes once I've sort of played around with it in DataCast a little bit, is I get all of the indicators and you can see that it just looks like, you know, okay, I have Abiomed stock price, right, on a negative correlation. How is this useful? Well, what I do is I sort it. I'll sort it by lead lag and by correlation. And so if you go up to data sort right in Excel, you'll be able to do that. And now I start seeing, okay, here's the higher lead time indicators. And if I go, if I go over here to data filter, I highlight this row, right? And then I can filter on the lead lag time and on the correlation. Why go through all this mess? Because you can do this in DataCast. Well, it's because now you can add in notes, and I love to do this. Right? I love to go in and I'll be like, okay, I'm gonna filter on lead lags of 5 to 20 months and correlations of at least 0.7. And then I'll just go down the list and I'll be like, France, no. Egypt, no. Chile, no. Corporate profits with capital consumption adjustments. Remember I mentioned that one early on. Hey, I like that leading indicator. Why do I like it? Higher profits, greater ability to purchase machinery. I look at the chart maybe in DataCast. Maybe I have DataCast up on my other screen. Maybe it has a good lead time and it looks nice as a predictor of those business cycle peaks and troughs. I'm going to mark it. And so why I love this is when you're done, you'll be able to filter on all the ones that you've liked, and you'll be able to have your notes of why you liked them. Then just go into DataCast and you'll favorite them, and then you can track them over and over and over. And when you want to look back at, hey, why did I pick these again? Hey, why didn't I pick China household refrigerator production? Right? You'll be able to go back maybe and have a note. So sometimes I'll leave it blank, but I'll say, hey, maybe I'll keep an eye on this and come back to this one a little bit later. So use Excel too. You can use that. Don't have to. You can do everything in your DataCast online there, but you can also rip off the Excel sheet for those of you who love Excel. So I just wanted to demo that one feature. So that's it for me today. I hope that gave you a good sense of how to use your DataCast and how to use its features to come up with some great leading indicators. In the next video, we're going to be going over, so what? What does this mean for your business? How can you track your rates of change, your checking points, and your leading indicators to actually generate actionable advice for your business? Thanks so much.